But if you're above $3 million or more, you're actually very valuable.
This is a story about a dude named Lane. And one day he went to try to rent them out, and then he became one of the man.
So the question often comes up, how do I become part of the general partnership and get a little bit more bang for my buck? One of those ways is becoming what's called a key principal or loan guarantor part of the team. So what this is here for is we go out and get one of these big loans for these Fannie Mae, Freddie Mac, or any other loan. We need to have a partnership team or key principal / loan guarantor roster of individuals whose net worth gets us over the hump greater than or equal to the loan. So for example, if we're going after a $20 million building, probably going to need several guys or one guy who's $20 million net worth to be able to sign the debt. So in order for us to qualify, or in order for you to qualify, typically that means, you've got $1 million net worth or above. I mean, most guys in our sphere are about a $1 to $2 million range. So guys, unfortunately, those guys are kind of a dime a dozen, just one of the guys, it's the same. But if you're above $3 million or more, you're actually very valuable and you can definitely get compensated for signing on the debt on one of these deals. It has nothing to do with bringing in any money involved. So what a lot of these guys will do, these high net worth investors, they'll just sign on debt. And I get a little piece of the deal just for doing so. There is obviously risk involved, right? But I think there's a difference between non-recourse and recourse debt. And before you start doing this, I would say you got to really strongly feel confident in who you're working with. Definitely, I wouldn't be doing it on your first go around with somebody. It doesn't matter how much they're paying you. Because essentially, in a way, you're putting all your family net worth on the line and you can encumber your debt several times. So, I've signed on, I don't even know how many deals at this point. Most of which non-recourse debt, but it's crazy to me how you could sign on multiple loans. But then again, a lot of these are asset-backed deals, and as real estate goes, the value is there built in the asset. With some common questions that come up are, how does this work? How does this bump my return? Well, it's not really bumping your return. You're just kind of picking up some general partnership shares or overall shares in the process. There's always a set aside a certain amount for people who do this type of stuff. And talking back about the non-recourse component, just got to remember that even if a deal is non-recourse, there's usually a bad actor clause involved or the bad boy carve out, where if somebody in the general partnership does anything fraudulent, steals money, embezzles, that the agency lender can avoid that non-recourse component and come back for everybody for the debt. At that point, I'm just speculating, I think they're going to kind of come after the people with the biggest wallet books, and then it becomes definitely an internal litigation issue. But hopefully it never goes that far. And another way that people will get into deals with really no money as a general partnership is for putting up the hard money on these deals. So certain markets such as Dallas are super competitive, and to be considered serious and for them to even look at your offer, you may have to put in $100,000 or $200,000 of hard money. And for a lot of new sponsors, they may not even have that money in their pocket. Again, this is why I like working with people who are at least $1 million net worth and above. Definitely why I shy away from investing with house flippers, because a lot of those guys are under $500,000, $1 million, unless they've been doing it for several years. I just don't want to get screwed over by guys who don't have the net worth to cover it personally. And it's just one of my criteria when investing personally. But I digress there. So what you could do is you could come in and put up the hard money for somebody who doesn't have it and negotiate some percentage of the general partnership for doing so. There, as long as the deal closes, you should be able to get your hard money back, and in return, you get shares of the deal. But I don't know. I feel uncomfortable with this. I think it's a lot of money. I don't know if it's quite worth it. I've seen deals go through due diligence and for some reason it falls out. I also see a lot of deals that get shoved through because the operator doesn't want to lose their hard money, or they don't want to pay off their hard money lender and not, because they didn't close the deal. That can always be a little shady too. But for me, I sign on the debt on loans. I think that it is pretty fair in terms of what you're compensated with. And, you should like the deal. You should trust the people you're working with. The saying goes, only work with people you know, like, or trust to begin with. And yeah, can be a great way if you're higher than a few $1 million net worth to get a little bang for your buck. But if you guys have any more of these questions, I would check it out at SimplePassiveCashflow.com/KP or go to SimplePassiveCashflow.com cashflow.com/syndication for the complete syndication guide there. And I am coming up with the eCourse I'm actually working on this month as I'm wrapping up home arrest here. Boy, it's really helping me get stuff done without a lot of other distractions. So be on the lookout for that, and we'll catch you guys next time. Bye.
This website offers very general information concerning real estate for investment purposes. Every investor situation is unique. Always seek the services of licensed third-party appraisers and inspectors to verify the value and condition of any property you intend to purchase. Use the services of professional title and escrow companies and licensed tax, investment, and or legal advisor before relying on any information contained herein. Information is not guaranteed, as in every investment there is risk. The content found here is just my opinion, and things change, and I reserve the right to change my mind. Above all else, do your own analysis and think for yourself, because in the end, you are the only person who is going to look out for your best interests.